Hey, this is Leticia.
And this is Matt. Catch us on the REBA show every Tuesday from 2 to 3.
On our show, you'll be able to hear from the experts, everything about home ownership. Tune in on Tuesdays at 2 on the Blue Stream.
On FishbowlRadioNetwork.com. Jump in.
Free food, family fun, and great information await at the City of Arlington's 4th Annual Home Ownership Fair, Saturday, August 10th from 9 a.m. to 2 p.m. at the Esports Stadium Arlington and Expo Center. Receive information on credit repair, down payment assistance, home buying 101, and much more. This is an event you can't afford to miss. For more information and a chance to win prizes, go to arlingtontx.gov/homeownership fair or call 817-459-6238.
Comida gratis, diversión en familia y excelente información lo esperan en la cuarta feria de propietario en la ciudad de Arlington. El evento es el sábado 10 de agosto, 9 a.m. a 2 p.m. en el Esports Stadium Arlington and Expo Center. Encontrarás información acerca de mejorar de crédito, asistencia del desembolso inicial y mucho más. Para más información y la oportunidad de ganar premios, visita el sitio web arlingtontx.gov/homeownership fair.
Programming for the REBA show is proudly underwritten in part by the Arlington Tomorrow Foundation, contributing to a thriving Arlington, and in part by the Texas Association of Realtors Housing Opportunity Foundation. Funding is also provided by generous donations from listeners like you.
And this is Matt. Catch us on the REBA show every Tuesday from 2 to 3.
On our show, you'll be able to hear from the experts, everything about home ownership. Tune in on Tuesdays at 2 on the Blue Stream.
On FishbowlRadioNetwork.com. Jump in.
Free food, family fun, and great information await at the City of Arlington's 4th Annual Home Ownership Fair, Saturday, August 10th from 9 a.m. to 2 p.m. at the Esports Stadium Arlington and Expo Center. Receive information on credit repair, down payment assistance, home buying 101, and much more. This is an event you can't afford to miss. For more information and a chance to win prizes, go to arlingtontx.gov/homeownership fair or call 817-459-6238.
Comida gratis, diversión en familia y excelente información lo esperan en la cuarta feria de propietario en la ciudad de Arlington. El evento es el sábado 10 de agosto, 9 a.m. a 2 p.m. en el Esports Stadium Arlington and Expo Center. Encontrarás información acerca de mejorar de crédito, asistencia del desembolso inicial y mucho más. Para más información y la oportunidad de ganar premios, visita el sitio web arlingtontx.gov/homeownership fair.
Programming for the REBA show is proudly underwritten in part by the Arlington Tomorrow Foundation, contributing to a thriving Arlington, and in part by the Texas Association of Realtors Housing Opportunity Foundation. Funding is also provided by generous donations from listeners like you.
Hey, this is Leticia.
And this is Matt. Catch us on the REBA show every Tuesday from 2 to 3.
On our show, you'll be able to hear from the experts, everything about home ownership. Tune in on Tuesdays at 2 on the Blue Stream.
On FishbowlRadioNetwork.com. Jump in.
Free food, family fun, and great information await at the City of Arlington's 4th Annual Home Ownership Fair, Saturday, August 10th from 9 a.m. to 2 p.m. at the Esports Stadium Arlington and Expo Center. Receive information on credit repair, down payment assistance, home buying 101, and much more. This is an event you can't afford to miss. For more information and a chance to win prizes, go to arlingtontx.gov/homeownership fair or call 817-459-6238.
Comida gratis, diversión en familia y excelente información lo esperan en la cuarta feria de propietario en la ciudad de Arlington. El evento es el sábado 10 de agosto, 9 a.m. a 2 p.m. en el East Sports Stadium, Arlington and Expo Center.
Encontrarás in part by the Arlington Tomorrow Foundation, contributing to a thriving Arlington, and in part by the Texas Association of Realtors Housing Opportunity Foundation. Funding is also provided by generous donations from listeners like you.
Hello there. You're listening to the REBA Show, Homeownership Hear It from the Experts in the Blue Stream of the Fishbowl Radio Network. My name is Leticia Gallegos. I'm president and CEO of the Hispanic Real Estate Brokers Association. And co-hosting with me today is Sal Villalobos.
Hello, everyone.
And today we're talking about mortgage loan products. It's National Homeownership Month, and we're very aware that we have to be educational when it comes to home buying, especially during this month of National Homeownership Month. So unless you're paying cash, you'll need a loan to purchase a home. So Sal today will be answering your questions about mortgage loan products, the different products that are available with every lender. And if you want to join the conversation, starting off, call us, 214-431-5062. And any question you have, give us a call. So let's start, Sal, by we're going to talk about loan products individually, right?
Right.
And we're going to go through all the details of each one.
Well, as much as we can.
As much as we can, right?
There's so much information.
Okay. So let's start with FHA.
Okay.
So FHA stands for Federal
Housing.
Housing Administration, correct?
Right.
And is that a government loan?
Yes, it is. It's actually insured by the federal government.
Okay.
So many people don't understand that the FHA programs are actual laws. So when they make a change or they update their loan programs, they're actually changing law. It's actually handled by Congress. So
is that what a mortgagee letter is?
yes, ma'am.
Okay.
Mortgagee letter, it gives the lenders and everywhere else direction of what that new program entails. Some mortgagee letters are, the most recent was from 1993, but it's still in force. And there's another new mortgagee letter that came out as recently as I believe March 18th with new guideline changes. So we have to be constantly being updated with these loans.
And those mortgagee letters I mentioned are really geared towards the professional, for the lender, to
That's correct.
guidelines for the lender.
Exactly.
In you in turn let the client know about them.
That's correct.
And implement them into your products. Okay.
Right. So I always tell my clients, if you have a pre-approval that's over 3 months old, you definitely want to talk to your lender again. There may have been some changes as there were on March 18th. Certain pre-approvals that were set in place before March 18th were no longer valid after March 18th.
Okay.
So, but
All right.
we're far from that now. So.
Okay, so if you're listening out there, stay tuned, because we're going to be talking specifically about loan products. That's what we're talking about today, mortgage loan products. And so let's go ahead and start with FHA.
Okay, FHA. You have your standard FHA, otherwise known as a 203B. That's the code or the law. So it's a standard loan where you can purchase your home with as little as 3.5% down, which can be gifted, which are funds that you have seasoned or saved for over 2 months that we can verify, or you can get a gift from a family member, a nonprofit organization. I want to elaborate a little bit on who a family member is. A family member is either a parent, a child, a sibling, a spouse. A cousin is not considered a family member, but a family-like relationship. You can have friends that you've gone to school and known your entire life since grammar school, and we can document that. You could have been, if you were in the military and served together a few years ago, and we can document that relationship. We consider that as a family-like relationship.
Okay, so when you say gift, you're talking about a cash gift.
Cash gift.
Not a ring or a necklace.
Correct. not a ring or a yeah.
A cash gift.
Bullion.
Okay.
Here's a bullion of gold by your house. No, it's your down payment. Again, it's as little as 3.5% down, and And that's money that, again, can be given by a family member, a nonprofit organization, a government entity, or, again, a family member. Yeah.
Okay. So you talked about the 203B, which is the standard FHA loan that most home buyers are going to use if they choose to go FHA.
Correct.
Okay. Now, FHA has other products?
It does. But I'll elaborate a little bit more on FHA. FHA, there's a misconception that it's for low to moderate income families, which it's not. It was originally for that purpose, but it helps everyone. It offers more flexible guidelines. It allows you, again, to put as little as 3.5% down. Let's say that you have student loans. We can actually, we would have to take a payment, but if they're deferred. But as long as we can get a payment from their actual servicer for their student loans, we can actually take that standardized payment and include it in their what's called a debt-to-income ratio to qualify them for this loan. So, which is a little bit different going conventional. Another good thing about the FHA 203B, which is the standard, you can buy a single family or a 2-unit, 3-unit, 4-unit property with as little as 3.5% down. Most of the other programs are requesting 15%. There is one where 5%, but we'll touch base on that. But FHA, 3.5% down from a single family all the way up to a 4-unit. On a single family, you may or may not need reserves. It depends on if we run these programs through what's called an automated underwriting system. This automated underwriting system tells us what conditions we need to address. And in most cases on a single family home, it may not require reserves. A reserve is a month's payment, principal, interest, taxes, and insurance. So in some cases it may ask for 2 months. In some cases it may ask for no reserves. This is just on the off chance that's, there's a one-off where you're having difficulty making that mortgage payment that month, slow at work, went on vacation, you have where to go and make that mortgage payment for a month or two. Or in some cases it's not requiring it.
Okay. So you say that the down payment is 3.5%. That's
minimum.
the minimum.
Minimum.
Correct. Right. Okay. So let's see if when you say 1 unit, 2 unit, 3 unit, 4 unit,
multifamily, right?
Okay. So we're talking about a 1 unit would be single family.
Single family.
2
or
unit
a condo.
Or a condo.
Or a duplex where you only have one of the properties that's you're owning.
Okay. So if there's a duplex and you're only buying one side, it's considered single family.
Single family.
Okay.
Right.
So, but if you're buying both sides, then it's a duplex. That's a 2-unit.
If each property has its own property index or property identification, property index number or tax identification number, then each one is separate. So you have 2 different owners that each owner owns one property, one parcel.
Okay.
But if there's only one parcel number, then it's considered a duplex 2-unit.
2-unit. Okay.
Right.
All right. So and then a 4-unit would be a fourplex.
A fourplex, where the owner lives in one. And FHA loans are for homeowners that are going to live in those properties. Okay. It's not an investment property. So if you're buying a 4-unit, that means that you'll be living in one of the 4 units and renting out the other 3 units, which is great because those other 3 units can help you pay that mortgage payment.
Okay, so that being said, if you're buying a duplex and you're buying both duplexes, would you have to, as a home buyer, live in one of them?
That's correct. On any of the programs, the 1 to 4 units, you have to have home ownership.
Okay, well that clarifies. Yeah.
There's no 100% investment.
Okay.
And another well-known fact, or not well-known fact, is that with FHA, you can buy a 1-unit commercial with a 1-unit residential, a 1-unit commercial with 2-unit residential, a 1-unit up to a 4-unit, 3 residential. So technically, you can have a storefront.
Okay, but are we still
That's
talking?
still FHA.
Still FHA?
Still FHA.
With commercial?
3.5% down. I just helped a young lady a young gentleman purchased a 2-unit with a doctor's office on the first floor, and they're living on the second floor.
Wow.
And
Okay.
with that one, that actually was done with a 203K, which is a renovation loan. And we'll touch base on
We'll touch
that.
base when we come
Right.
back from the break. We're going to
Right.
take a little break here, but great information about the standard 203B FHA loan. If you want to join our conversation, don't hesitate to call 214-431-5062. And we'll be back in a moment, shortly.
And this is Matt. Catch us on the REBA show every Tuesday from 2 to 3.
On our show, you'll be able to hear from the experts, everything about home ownership. Tune in on Tuesdays at 2 on the Blue Stream.
On FishbowlRadioNetwork.com. Jump in.
Free food, family fun, and great information await at the City of Arlington's 4th Annual Home Ownership Fair, Saturday, August 10th from 9 a.m. to 2 p.m. at the East Sports Stadium, Arlington and Expo Center. Receive information on credit repair, down payment assistance, home buying 101, and much more. This is an event you can't afford to miss. For more information and a chance to win prizes, go to arlingtontx.gov/homeownership fair or call 817-459-6238.
Comida gratis, diversión en familia y excelente información lo esperan en la cuarta feria de propietario en la ciudad de Arlington. El evento es el sábado 10 de agosto, 9 a.m. a 2 p.m. en el East Sports Stadium, Arlington and Expo Center. Encontrarás información acerca de mejorar de crédito, asistencia del desembolso inicial y mucho más. Para más información y la oportunidad de ganar premios, visita el sitio web arlingtontx.gov/homeownership fair.
Programming for the REBA show is proudly underwritten in part by the Arlington Tomorrow Foundation, contributing to a thriving Arlington, and in part by the Texas Association of Realtors Housing Opportunity Foundation. Funding is also provided by generous donations from listeners like you.
Hey, this is Leticia.
And this is Matt. Catch us on the REBA show every Tuesday from 2 to 3.
On our show, you'll be able to hear from the experts, everything about home ownership. Tune in on Tuesdays at 2 on the Blue Stream.
On FishbowlRadioNetwork.com. Jump in.
Free food, family fun, and great information await at the City of Arlington's 4th Annual Home Ownership Fair, Saturday, August 10th from 9 a.m. to 2 p.m. at the East Sports Stadium, Arlington and Expo Center. Receive information on credit repair, down payment assistance, home buying 101, and much more. This is an event you can't afford to miss. For more information and a chance to win prizes, go to arlingtontx.gov/homeownership fair or call 817-459-6238.
Comida gratis, diversión en familia y excelente información lo esperan en la cuarta feria de propietario en la ciudad de Arlington. El evento es el sábado 10 de agosto, 9 a.m. a 2 p.m. en el East Sports Stadium, Arlington and Expo Center. Encontrarás información acerca de mejorar de crédito, asistencia del desembolso inicial y mucho más. Para más información y la oportunidad de ganar premios, visita el sitio web arlingtontx.gov/homeownership fair.
Programming for the REBA show is proudly underwritten in part by the Arlington Tomorrow Foundation, contributing to a thriving Arlington, and in part by the Texas Association of Realtors Housing Opportunity Foundation. Funding is also provided by generous donations from listeners like you.
Hello, you're listening to the REBA Show, homeownership, hear it from the experts in the Blue Stream of the Fishbowl Radio Network. My name is Leticia Gallegos. I'm president and CEO of the Hispanic Real Estate Brokers Association, REBA. And co-hosting with me today is Sal Villalobos.
Hola, hello everyone.
Now, Sal, I didn't mention before, but Sal has, over 20 years experience as a mortgage lender?
20 months. No, over 20 years, definitely.
20 years. And I'm a 15-year veteran of the real estate as a realtor. So we are answering any questions you have. Join our conversation. We're talking about mortgage loan products because there's different mortgage loans that you can buy when you're that you can use when you're looking to purchase your home
Or refinance.
Right. So whether you have a home already and you feel your interest rate is a little high or want to know if it is or not, don't hesitate to contact us. If you have any questions and you're not able to call into the show, please email us at rebashow@rebaconnect.org. And that's spelled HREBASHOW at HREBAconnect.org. And we'll be happy to answer any questions. So we were talking about the 203B, which is the standard FHA loan.
Right.
And if you have any questions about that, call us because we're moving on to the 203K.
203K.
Which is an FHA loan as well.
There's actually two 203Ks.
Okay.
One
Tell
is
us
your
about it.
standard 203K, which includes if there's any work that is in nature of foundation, structural, that's an FHA loan, 203K. And if it's over $35,000 in repairs. There is the 203K limited, which is less than $35,000. There isn't any structural or foundational issues.
Okay.
So I'll start with the limited, and then we'll jump up to the full.
Okay.
With the limited 203K, the minimum loan amount is about $5,000. We use the future value of the property, and I'll get into specifics, the future value to determine the loan amount. So, for example, on both your renovation loans, the 203K or 203K limited, hypothetically, let's say you're buying a house for $100,000, and it's in disrepair. You need a new roof, windows are broken, the flooring needs to be replaced. The house probably hasn't been updated since 1971. You want to put new counters in. The house is in the bones of the home are great. It's in the area that you want to move into. It's a good opportunity based on the price, but you just can't get over the house and in the condition it's in. You don't want to invest that much money, and most importantly, a lender's probably not going to lend on that home. Well, with a FHA 203K limited, or the full 203K, as it's sometimes called, will allow you to use the future value to determine the loan amount. For example, again, if the value of the home is $100,000, as is, that's the purchase, and to repair, let's say it's another $50,000. The acquisition cost is $150,000. We're going to use 3.5% of $150,000 as we would if you were just buying the home
as a down payment.
As a down payment, 3.5% down.
Okay.
So they'll give you the money, or not give you, but on top of your mortgage, they're going to finance the repairs. They'll pay the homeowner, the existing homeowner, the seller. They'll pay them off, and then they'll put let's say the $50,000 into a escrow account, where they'll give, on the limited, they'll give and again, on the maybe I should go back. Let's start at $100,000 purchase price with $35,000 in repairs. They will they'll pay off the homeowner, the existing homeowner or the seller, the $100,000. The additional funds will be put into an escrow account. You're still coming with 3.5% down. They'll put those funds into an escrow account. The day of closing, they're going to write a check for half of the amount, up to half the amount, and so that the contractor can pay for material and labor. After that, after they finish the home, they're going to send an inspector there again to go look at the property, or the appraiser. They're going to make sure that it was done in a workmanlike quality. And if it was, then they'll release the other half. But in that, they can incorporate, new kitchen, new windows, new flooring. If there's painting that needs to be done, they can do that. If they need to replace something in the garage, they can do that as well, such as, let's say, a soffit or a new door. Anything that is health or safety, they're going to address that over and above of what you want done. That's under $35,000. No structural repairs or foundational issues. The next one is the 203K, which is just a standard.
Okay, so let's tell everybody what we're talking about here.
Okay.
So if you're just tuned in and you're listening, we're talking about mortgage loan products, and we're talking about the 203K, which sounds scary to a lot of professionals, a lot of realtors especially, that don't know how a 203K works. It's good to have a lender that knows the product and can guide you through that product. So we're talking about the opportunity that you have as a home buyer, that your house doesn't have to be perfect. It can have some repairs that need to be made, and you can still get a loan on it, because sometimes we think that, it needs too much work, the bank's not going to lend on it, so we walk away from it. But there are loan products available that will escrow, will lend you the repair amount, so you can still purchase the home and do the repairs to get it looking and feeling the way you want it, and still get a loan.
Right.
Still
And-
get a loan, right? So-
Right, and even if the home is, let's say, 2-unit, but you have, two bedroom, one bath, and you need more space, but it's in the perfect location, it's within your purchase price range, you can actually use this loan to build up. You can add a second floor, add additional bedrooms, and another bathroom. It's been done, especially now with a lot of, and you can do this on a purchase or refinance. We're seeing a lot of parents moving in with their adult children, or the parents or the adult children moving in with the parents. So we're seeing a lot of generational living.
Okay.
So in some cases, they have enough equity in the property, they can't afford to move based on the certain current prices and in their income. But in some cases, they can build up and build out. So it's giving them the ability to live,
expand and
live
be
together.
able to finance
right,
it.
and afford it.
Yeah.
And not feel
Okay.
that huge pinch.
Okay, great. So now you're going to talk about the difference between the 203K reno and a 203K limited reno.
Right. So the 203K, as it's known, just 203K, is for a loan that's over $35,000, or needs foundation work or structural.
Okay.
If there is infestation, rat infestation, termites, ants, carpenter ants, that's going to usually be a structural issue, because they do gnaw at the wood. So even though the work may be $30,000, just because there's that rat infestation, we more than likely are going to do a full 203K. Full 203K allows you to go up to the county limits. So technically up to $365,700. It'll allow you to go up to that loan. I actually went up high this month. This year it went up a bit higher. So it will allow you to go up to those mortgage limits. So you buy a house for $100,000 and it needs $150,000 worth of repairs. You can use this loan to purchase that home. You can also use it for mixed-use properties, where if you're buying you want to buy a 2-unit, but it has a storefront, you can use this program as well to do so. Again, you can have structural issues, you can have foundation, and you can incorporate it into that.
Okay.
There can be asbestos, and you can have it removed. There can be, and everything has to be done by a licensed contractor. It should be done by somebody that has their EPA certifications. We want to make sure that if they're doing the work, that they're doing it in the best possible manner, and they are containing instead of just expanding what's there.
And regulated.
Correct.
Yeah. Okay, so I have a question. So
Yes.
what is qualification-wise? Is there a difference between the standard 203K, 203B, and the 203K as far as qualifying? Are the same standards?
It's the same standards. Same standards.
Standards for qualifying?
Same standards. 3.5% down from the purchase price. The only difference is one has a purchase price plus or acquisition cost, which is the purchase price plus the repair cost. The other one is solely just the purchase price.
Yeah. Okay.
With FHA, they do adhere to the livability standards. There can't be any peeling paint, hanging wires, not having the correct switches or outlets that may pose threats.
And that's what you would do when you're remodeling it, or you're bringing it. You should bring it up to standard.
Exactly.
Yeah.
Not everybody needs an air conditioner, but if you live in Texas, you need an air conditioner, so they want one in there.
Yeah.
Not everybody needs a heater, but if you live like in Minneapolis, you definitely need a heater. But these are some of the requirements, and that's what this program is great for. It's been able to help a lot of homeowners buy that home that they may otherwise not been able to qualify for, or they qualify for, but they want to make it their own. You don't have to have repairs. It just may not be what you envision as your home to be, and this will help you purchase that.
Okay, so if you're listening out there and you're hearing what Sal has to say, and you say, "Oh, that sounds like too much work," or "It's too good to be true," tell me more details, Sal, about who gets the estimates, who's going to have to do all the legwork to get to prove to you, or to prove that it's been. Tell me the process, because do you get estimates first and then get the loan, or do you get the loan and then get estimates?
Well, I usually try to, I don't usually try. I educate my clients and or customers at that time to be open to different ideas, especially if their price points are somewhat lower than what they want to purchase, or where they want to purchase. There are some opportunities where they may be able to buy. So who does the amount of the legwork? Well, it is the loan officer with the homeowner. We're both it's a partnership, and also with the real estate agent. General contractors. Best referral sources are your friends and family members that have worked with the general contractor. It's the best recommendations, because you can go to their home, you can see the work, you can ask them about how they performed. Were they easy to work with, were they difficult to work with? So that's first. Okay, so they go out, they identify a property. I'll get a call from the agent saying, "Listen, we found the perfect home, but these are these little issues with the property." I know they were going FHA, and I know FHA is very stringent on their guidelines regarding the health and safety. Will it pass? And I'll say, well, what are your concerns? Oh, peeling paint. There's missing spindles on the stairs. The concrete in the front door, in the front stairway is crumbling. These are all issues. We don't want our clients to have an accident or one of their visitors. So we're going to have to get that addressed. So we'll work with the homeowner. We'll revisit what they can qualify for. Let's say they found a house. They're qualified for $150,000. They find a house for $100,000. We'll make some adjustments based on still the 3.5%. That has not changed. The all we're going to do is do the purchase price plus the repairs, 3.5% from there. We will add a contingency depending on the type of work. What is a contingency? A contingency escrow is in case once they're starting to do the work, they uncover additional issues. Most of the time, the homeowner won't have those additional funds. The lender's already qualified you on a certain dollar amount. So here it's a contingency fund, usually of 10 to 20% down, to address those other issues, so that we're not in an impasse that we can't go forward. Because a contractor is not going to do the work without getting paid. The buyer may not have the funds. The lender's already committed to what they've committed, and it's after closing. So all these repairs can be done after closing. So the general contractor gives us a bid. If it's under 35,000, they go out and inspect the property. Say, okay, it's 20,000. New roof. They'll get what the buyer wants to do to the property. We'll also get a HUD certified consultant to go look at the property ahead of time. Because what you don't want to do is get a bid, say for $15,000, addressing only what the buyer needs or wants, and then you order the appraisal. 2 weeks later, you get the appraisal letting you know that there's peeling paint, the roof is at the end of its life, the mechanicals are having issues.
To avoid any delays,
right.
Things like that.
It avoids the delays.
You want to do all your due diligence in the beginning.
Exactly. So they do that. They give us they mirror. We'll give the general contractor, the HUD consultant's feasibility report, and we'll give that to the contractor so they can add that into their bid. From there, the lender pretty much is in control, making sure that they're ordering the appraisal on time, making sure that we're addressing we're addressing all of the concerns that are on that feasibility report. That saves us time up front.
Sounds like a great product. So is it a longer process than a normal loan?
It can be longer.
How much longer?
Well, it just depends on the type of work. It depends on your contractor, how quickly they are to respond to changes.
So on the contract, we have a closing date.
Right.
What date should we put on that contract for closing on a 203K?
Okay. When we're not at the height of the buying season, we'll usually tell people on a limited, about 45 days.
Okay.
On a full 203K, about 60 days.
Okay.
Some lenders are able to perform under. Some lenders are performing 90 days. So it just really depends on the lender you're working with.
Okay, so we have to have a seller willing to do a 60-day close.
Correct. Depending on, especially if they know, usually those sellers are willing to accommodate the time frame because they know that they can't sell the home without those repairs being done, and they don't want to invest if they have to sell or they want to sell. I mean, it's not within. It may not benefit them to do those repairs.
Okay, so if you're listening and you have a question, please join our conversation at 214-431-5062. We're in the Blue Stream of the Fishbowl Radio Network. And, all right, so let's take a quick break. We're going to take a quick break, and when we come back, because that's a lot of information on the 203K, and it's individualized, right?
Correct.
Based on the property, based on the borrower, and there's a lot of detail to it. But you kind of gave us an overview that it's an option.
Yes.
It's an option, and if you're a home buyer out there that you're looking to purchase, don't walk away from a house that you can repair. Ask your lender if they can help you with the financing for those repairs. It's doable.
And just keep in mind that it has to be a homeowner, your primary residence. You have to live there.
Sure. Okay, so that you have to live in the property. So when we come back from break, we'll be talking about conventional loans, which is a different, another different loan product. So we will be back shortly. Hey, this is Leticia.
And this is Matt. Catch us on the HREBA show every Tuesday from 2 to 3.
On our show, you'll be able to hear from the experts, everything about home ownership. Tune in on Tuesdays at 2 on the Blue Stream.
On FishbowlRadioNetwork.com. Jump in.
Free food, family fun, and great information await at the City of Arlington's 4th Annual Home Ownership Fair, Saturday, August 10th from 9 a.m. to 2 p.m. at the Esports Stadium Arlington and Expo Center. Receive information on credit repair, down payment assistance, home buying 101, and much more. This is an event you can't afford to miss. For more information and a chance to win prizes, go to arlingtontx.gov/homeownership fair or call 817-459-6238.
Comida gratis, diversión en familia y excelente información lo esperan en la cuarta feria de propietario en la ciudad de Arlington. El evento es el sábado 10 de agosto, 9 a.m. a 2 p.m. en el Esports Stadium Arlington and Expo Center. Encontrarás información acerca de mejorar de crédito, asistencia del desembolso inicial y mucho más. Para más información y la oportunidad de ganar premios, visita el sitio web arlingtontx.gov/homeownership fair.
Programming for the REBA Show is proudly underwritten in part by the Arlington Tomorrow Foundation, contributing to a thriving Arlington, and in part by the Texas Association of Realtors Housing Opportunity Foundation. Funding is also provided by generous donations from listeners like you.
And this is Matt. Catch us on the REBA Show every Tuesday from 2 to 3.
On our show, you'll be able to hear from the experts, everything about home ownership. Tune in on Tuesdays at 2 on the Blue Stream.
On FishbowlRadioNetwork.com. Jump in.
Free food, family fun, and great information await at the City of Arlington's 4th Annual Home Ownership Fair, Saturday, August 10th from 9 a.m. to 2 p.m. at the Esports Stadium Arlington and Expo Center. Receive information on credit repair, down payment assistance, home buying 101, and much more. This is an event you can't afford to miss. For more information and a chance to win prizes, go to arlingtontx.gov/homeownership fair or call 817-459-6238.
Comida gratis, diversión en familia y excelente información lo esperan en la cuarta feria de propietario en la ciudad de Arlington. El evento es el sábado 10 de agosto, 9 a.m. a 2 p.m. en el Esports Stadium Arlington and Expo Center. Encontrarás información acerca de mejorar de crédito, asistencia del desembolso inicial y mucho más.
Programming for the REBA Show is proudly underwritten in part by the Arlington Tomorrow Foundation, contributing to a thriving Arlington, and in part by the Texas Association of Realtors Housing Opportunity Foundation. Funding is also provided by generous donations from listeners like you.
Hello, you're listening to the REBA Show, homeownership. Hear it from the experts in the Blue Stream of the Fishbowl Radio Network. My name is Leticia Gallegos, President and CEO of the Hispanic Real Estate Brokers Association, REBA, and co-hosting today the knowledgeable Sal Villalobos with, we're talking about mortgage loan products.
Yes, ma'am.
It's National Home Ownership Month, and we want to keep you informed about the home buying process, and the important thing about the home buying process is getting the mortgage loan. Unless you're paying cash, you'll need a loan. So this is a brief overview of the loan products available from your lender. Now, if you're wanting more information and you're listening to this on a podcast or a replay, email us and we can send you from our organization, we're a nonprofit, a list of our members that can specifically answer your questions. So email us at REBAShow at REBAconnect.org. So the email is REBAShow at REBAconnect.org, and we'll be happy to send you a resource list with all our members on it, and they're broken down by category. We have a list of realtors, a list of mortgage loan officers, title companies, you name it, it's on our list, and that'll be a really good resource for you to have as you start your journey towards home ownership. So, Sal, we left off talking about the 203K loan product, which basically is an FHA loan, and it's a renovation loan too.
That's correct.
So that was great information. So let's move on to conventional.
Okay.
So what do we mean when we say a conventional loan?
That it's not a government loan.
It's not a government
loan.
Right.
It's conventional, going through either Fannie Mae, Freddie Mac. Conventional can also be a portfolio loan. It's just not an FHA loan. So with conventional, Fannie Mae, it's an agency that
Is it a government agency?
No, a lot of people believe it's a government agency. It was at one time backed by the government agency during the downturn that we had back in 2008. But it's not a government agency. It's actually a private agency that allows for. They have guidelines to underwrite. For example, one of the programs that they use is the Home Ready. It's an affordable program, which allows you to come in with as little as 3% down, which is their answer to like the FHA. It's 3% down. It's a little bit more flexible than their normal conventional, 30-year fix. And these are 30-year fixed loans. 3%.
When I hear conventional, the first thing I think of is 20% down. I've got got to have a lot of cash when I hear conventional. But you're telling me that there's a conventional option with 3%. Okay, so that I just had a light bulb. So
Private
what that?
mortgage insurance.
Yeah. So tell us what the difference is between putting 3% down and 20% down.
Well, if you put 3% down, you are going to have what's called private mortgage insurance. Just as when you drive a car, you have an insurance policy for your car in case something were to happen. If you, the same thing for your homeowner's insurance. Something happens to your home, you need insurance to cover certain risk. Same thing with private homeowner's insurance. Private mortgage insurance. Private mortgage insurance covers the lender on the off chance that the client defaults.
So it does not protect the home buyer, the home purchaser. It protects the mortgage company.
The lender, right?
Against the lender against default.
Default. It doesn't make the lender whole. It just covers a portion of.
Okay. So if we have listeners out there that are listening that do not want to pay, because that is added on to their mortgage monthly payment.
That's correct. That's in addition to your principal, interest, taxes, and homeowner's insurance,
right?
Which is what covers your home in case of wind, accidents.
Right.
Your private mortgage insurance is solely in case you default on that loan.
Okay, so if they don't want that extra charge, then it's a good idea to save up for a 20% down.
Or they can take a second mortgage, such as a home equity line or a home equity loan. Those are available. Your home equity loans are fixed for a number of years, and then you have a home equity line, which is almost like a credit card. It does fluctuate with the prime rate, and it's a little bit it's a bit more restrictive than it used to be years ago. Before it was a lot more riskier, I would say. Now it's come in. Lenders are now about sustainable home ownership. They're not here to put a client into a program that's risky.
Okay. All right, good. So tell us more.
So the Home Ready allows for higher debt-to-income ratios. What is a debt-to-income ratio? Is the amount of debt that a homeowner can carry against their income. That debt ratio takes into consideration all of their debts reported on their credit report, such as auto loans, installment loans, revolving lines of credit. But we also take into consideration any loans that are not, and the lender's going to ask the homeowner to let them know if there's any loans that they have taken out recently or that they're on that may not appear on the credit report. Again, we want to make sure that we are properly qualifying that client to buy that home, because we want to put them in the best foot forward so that they're successful in home ownership. So I lost my train of thought.
So if you're listening and you have some questions on conventional loan, please join our conversation. You can call in at 214-431-5062. Whatever question you have about mortgage loan products, do it now. We have the answers for you. And so we're talking about conventional, and we're talking about the Home Ready. And then there's a renovation loan also from Fannie Mae, conventional.
Correct.
Tell us about that one.
So I'm just going to say a couple more things about the Home Ready, because it's going to tie in with the home style, which is Fannie Mae's renovation loan.
Okay.
The Home Ready allows you to put as little as 3% down. Also, it allows you to have that mortgage insurance at a discounted rate. Okay. So you're paying less in homeowners insurance if you're going through the Home Ready program than if you would through the regular 30-year fix mortgage program, loan program. Also, with the Home Ready, you can use border income, a percentage of that, to help you qualify. The limits are a bit higher than they would be because we're using as a compensating factor that border income.
That what income?
Border income. For
Border.
example, let's say
It's
that...
the first time I hear of border income.
Yes.
Okay.
So let's say that you have an adult child living with you, been living with you for the last 12 months.
Okay.
And will, and as long as they're willing to sign an affidavit that they will continue to live with you for the following 12 months, they can consider that that a percentage of their income because they know that you're contributing to that household. So they can use that. But again, we need to make sure that we're qualifying these clients correctly. So with the home style, which is the Fannie Mae's renovation program, you can do both principal residence and investment properties. So with the investment properties, again, 25% down. That's the minimum requirement. With the regular principal, single-family home, you can go with as little as 3% down. And if we tie the Home Ready with the home style, the mortgage insurance, if you're putting less than 20% down, is at a reduced rate.
Okay.
So with the home style, let's say you're buying that home and it's you want that HGTV home. You can use this program for that. Again.
Okay. So Freddie Mac also has some? Before we run out of time, I wanted to make
Freddie
sure.
Freddie Mac has the Home Possible program.
So it's Fannie Mae and then Freddie Mac.
Right.
And they're both non-government.
Right. They're both conventional
agencies.
loans. So Fannie Mae has the Home Ready. Freddie Mac has the Home Possible. Fannie Mae for a 15-year fixed, for a 2-unit requires 15% down. Freddie Mac, their Home Possible, you can buy up to a 4-unit with 5% down.
Okay.
Reduce mortgage insurance as well. They have their standard program. If you're self-employed and you've been in business for more than 5 years, in some cases you may only have to demonstrate 1 year's worth of business tax returns. So instead of having to go back and look for all of your past year's returns, we can use 1 year. The Home Possible as well can use, let's say, 5% down under 5% down under multifamily. You can not have to be a first-time home buyer. You can be a repeat buyer. A gentleman,
an
investor. Well, no. It's still that 4-unit is owner-occupied property.
The 4-unit, yeah.
But you can have what's called departure of residence, which means you can leave your other property rented and still buy this as as your new primary residence.
Okay.
So it allows them to come in with 5% down, which is not bad on a 3 to 4 unit. A 2 to 4 unit.
Okay. Wonderful information. Now, we could go on for another hour about mortgage loan products and that type of thing. So you're listening. You still have questions. We're not going to abandon you. You can contact us. You can contact us through our Facebook, REBA Show, Home Ownership Hear It From the Experts on Facebook. You can go to our website. You can email us at rebashow@rebaconnect.org. And we have lots of information for you. The Hispanic Real Estate Brokers Association is a nonprofit 501c3 corporation. And we've been streaming live on Facebook. Thank you, Sal, for all the great information. And you can see a replay of the video on the Reba Show Facebook page and also on our YouTube channel, where you can subscribe to see future videos as well. Please follow us on Facebook and Twitter at Reba Show. And this episode is available also as a podcast on our website. Just click on the Reba Show. And also on the Fishbowl Radio Network, fbrn.us. And if you want to learn about topics that we have coming up in the future, next week we're inviting the City of Arlington Code Compliance Officer to come and talk to us about different services that the City of Arlington offers that you may not be aware of. So mark your calendars, Tuesday at 2 to 3. And if you have questions for City of Arlington Code Compliance, be sure to tune in next week. If you have any specific questions, like I mentioned before, you may email us, rebashow@rebaconnect.org. I am Leticia Gallegos, President and CEO of the Hispanic Real Estate Brokers Association. We thank you for spending an hour with us today. Thank you again, Sal, for co-hosting. And we will see you next week. Have a great afternoon.